Welcome and thank you for being with us today. I'm Amjad Ahmed and I'm Director of Empower Middle East here at the Atlantic Council's Rafiq Hariri Center. Our new initiative is focused on empowering key groups in the region, including entrepreneurs, as a critical path to a more productive and prosperous region. As we think about thriving markets, we want to think about creating a fertile environment to produce, fund, and scale new companies. A key component of successful entrepreneurial markets is a deep and liquid venture capital industry. Today's discussion will focus on how we continue to build the venture capital industry in the Middle East, but more importantly, how do we ensure its sustainability in the long term? We have assembled a strong panel of active investors in the largest venture markets in the Middle East, Egypt, Saudi Arabia, and the UAE. We are glad to have with us today Ahmed Al-Naimi, partner at STV, the largest venture capital firm in the Middle East based in Riyadh with 500 million under management. Ahmed Al-Alfi, chairman and co-founder of Sawari Ventures, a leading venture capital firm based in Cairo and co-founder of regional accelerator Flat6 Labs. Noor Swade, general partner at Global Ventures, a growth stage venture capital firm based in the UAE. And Chris Schroeder, our moderator for today's discussion. Chris is the co-founder and general partner of Next Billion Ventures, as well as an advisor to venture capital firm Village Global. Chris will kick things off by asking all of us panelists a few questions, and then he will take questions from the audience. To engage in a discussion, if you are joining via Zoom, please type your question in the Q&A box located in your control panel. We will answer as many questions as we can. And with that, I'd like to turn it over to Chris.
Well, it's fantastic, and it's an honor to be here. And I really want to salute Fred Kemp, Will Weschler, and you, Amjad. I mean, it's you and your amazing team of women and men are shining light on a very new and powerful Middle East. And I think the effort is unique in Washington. So honored to be here. Just as a quick note of framing, look, I believe the greatest tech revolution today is not AI or machine learning or genomics, not the tech itself, but near universal access to it. 60, 70, 80% of humanity now is walking around with a supercomputer in their pocket. And this has, among other things, unleashed literally billions of new customers in parts of the world we here in America don't think much about, or if we do, it's in old narratives. In fact, the old American playbook was increasing access to tech meant all you had to do is show up where a market was big enough or outsource where labor markets are cheap enough. So the Facebook, Instagram, WhatsApp, Google, Intel of almost anywhere has been, well, Facebook, Instagram, WhatsApp, Google, and Intel. This is no longer the case. For the first time, billions of people have local and regional choice. They no longer have to accept only one-stop shop products from the West, but have access to services more attuned to their realities and cultural differences. China, of course, is exhibit A to this shift, but mini Chinas are rising in large new markets from Jakarta to Cairo to Nairobi to Mexico City. The largest e-commerce player in Latin America is not Amazon, but Mercado Libre, with a market cap now of astounding $90 billion. The world's largest neobank is Nubank, 34 million people in Brazil and Latin America using it, valued at over $25 billion. The largest ride-sharing and super app in Southeast Asia is not Uber, but Grab, whose new round is well going to exceed their last round of $14 billion. And there are more massive exits happening and coming everywhere. MENA's captured attention in recent years, not only with the quantity of quality entrepreneurs, but the significant acquisitions of regional e-commerce player Souq.com and the ride-sharing platform Careem from Uber. Countries in the Gulf have leaned forward in regulatory environments to welcome innovation, talent, and streamline rule of law to support fintech beyond. But somehow the region is not quite in the headlines recently as other parts of the world. Are we about to enter a new golden era of startups for the region and perhaps as a hub of new globalism that could include from Africa to Southeast Asia and beyond? Again, let me remind you, do ask your questions. Please put your name in there and we're going to get right to it. Starting, Noor, with you if we could. Noor, you have just been this amazing wealth of experience in startups for over 10 years in the region. What is the most surprising strengths you see right now? And what do you think is still most needed?
Thanks, Chris, and thanks everyone for having me. It's good to see some old friends and new friends on this panel. So from our perspective, and I won't ignore the pandemic, I'll just address the elephant in the room, but we see COVID as a massive accelerator. And what we've seen recently in digital health and the opportunity around digital health is very similar to what we saw 10 or 12 years ago after the financial crisis. So after that happened 12 years ago, there was a massive push towards financial inclusion, and people started taking a look at the data. The region was 85% unbanked and so on and so forth. And this is, across Middle East and Africa. And suddenly this population of 1.5 billion people, and MENA specifically 400 and something million, went from cash and coin to mobile wallet, right? So we completely leapfrogged that infrastructure. And now you have this massive healthcare crisis that the world is witnessing. And all of a sudden you have conversations around healthcare inclusion and digital health. And when we metric the region, when we take a look quantitatively at the data, we find that there's 1.3 doctors per 1,000 people as opposed to 4.8 in developed markets. And so there's, again, that huge gap similar to financial inclusion 10 years ago. And when we take a look at that gap, my bet and our house view is we're not going to go build hospitals to fix healthcare inclusion, just like we didn't build banks to fix financial inclusion. The question is, how do you go from no medicine to telemedicine, no diagnostics to remote diagnostics, right? How do you get people that have no access to healthcare to suddenly have at their fingertips using technology, access to medicine, access to doctors, access to what they need at a very basic level. So that huge change becomes, exponential for people's lives. 1.5 billion people across Middle East Africa, 400 million in MENA. And as we think about it, those companies, the digital health companies that have been in the market for several years, have been underfunded because of the regulators being so shy to embrace this, the insurance companies not wanting to pay for it, and patients reluctant to use it. And suddenly, because of COVID, you've had a massive change in behavior across these three parts, and that's what's moving us towards where is the opportunity, what are we seeing? We're seeing huge opportunity and change in digital health, and really people leaning into that to take advantage.
What's most needed in order to unleash exactly what you just described?
So we are starting to see it. We first need the regulator to say, we will regulate this, in a positive way, rather than we don't want digital health, which was a tune last year. And then the insurance companies have to step up and say, we're happy to pay for it. Which again, now they're doing in the region, and this was the last region for insurers to say that. In the US and other markets, you've had insurers before pay for that. And finally, the patient was the first to want to use it here, because it's not that I'm improving my access to a better doctor that is closer and having to wait 20 minutes less, right? It's suddenly I've gone from no doctor to I have a doctor. And so patients are the first to embrace this behavior change. And so what's really needed is these three, parties to continue in this manner, and the funding required for these digital health companies to grow, right? So we have, for example, a company that has gone from 200 teleconsults a day in February to 15,000 a day now, right? And if it wants to continue to grow that way, it needs to be funded. And therefore you need venture capital.
It's interesting. You've talked about the acceleration of COVID. One more quickly, if I could bother you. The old playbook also said that hubs of physical mattered, right? And so Dubai was rising certainly as a hub, but now we're seeing Abu Dhabi rising as a hub. Saudi Arabia may have a couple of hubs rising. Does geography matter in order to unleash these dynamics beyond? Obviously, you have to navigate the ground and regulatory things. But does an innovation physical hub matter in the new Middle East?
So I think that is a more global question, Chris, than a Middle East one. So I think that, 2 years ago, I'd have said, I like to think no, but it probably does. Now I'll tell you it matters less. And again, COVID accelerated. So whether someone's in the same zip code as you or 7,000 miles away, you're on Zoom regardless. I think that physical location matters in terms of, does proximity to the problem you're solving matter, so that you have a deep understanding of the problem and the pain points, right? So you can solve everything you want in digital health, for example, in Nigeria, but unless you're solving the pain point of people can't afford to pay for it in the first place, and you don't have an embedded fintech in your digital health solution, then are you really solving the biggest pain point? And that becomes, yes, location matters because it matters in terms of understanding the problem and the applicable solutions and their ability to scale in the local market. To that extent, yes, location matters. Anything else, I think, can be globalized.
So interesting. I mean, I have to tell you, even I will only invest 50 miles from Sand Hill Road, Silicon Valley friends are completely rethinking it for the very reasons you described. Alfie, Egypt is a staggering talent, and it's a very large and it's a good market, but the VC there seems still pretty small. What are the trends and what are the focus, and what are we going to be talking about in Egypt right now?
I'd say, piggybacking on what Noor said, a continuation of everything that Noor said about healthcare, but adding to that education, because in Egypt, the educational infrastructure really has had us ranking in the bottom 5% in the world for the past decade. And I really think that it's going to be transformative, again, with the same hurdle that Noor highlighted, which is the regulator must accept it. The government must say, this is a valid degree or a valid high school certificate. And it'll make a major change. Right now, there are several looking at bringing that online and offering full university degrees in Egypt. For us, we're looking at kind of more techie things. We've just recently invested in 2 different chip companies. Okay, so there is that talent in Egypt that's not available anywhere else in the Arab world. So we like that space, and we like going into an area that not a lot of other VCs are looking at, and it's global. A product for engineers and a non-consumer product can succeed from anywhere. Consumer products really seem to need to be from the US or from China, consumer digital products to succeed. But products for engineers, they're only ranked on performance. So it's the expansion, just adding to that. We just invested in a company last year. It's the Shopify of Egypt, or the Shopify of the Middle East. Met the company online, never met him, negotiated the deal on Zoom, funded it, closed the whole thing without ever meeting the guy. I met him 3 months after we gave him the money. And that leads to your point, which is maybe this will finally allow Sand Hill Road, everybody else, to take a serious look at our companies, because right now, Series A for good companies, okay, that can be done. We used to struggle with that before. Very few good companies don't get a Series A. What about the next round and the next round? That's where we need pools outside of Egypt, outside the finite amount of capital we have here.
Do you think, I mean, this is a kind of an extension of the question I asked Noor. The old days was, if you were going to be a great Middle East company, once you were successful in a market, you had to move to the UAE, and maybe it'll be the UAE or maybe Saudi. Is that true, or will Egypt companies be Egypt-based companies and growth will come as it comes globally?
I think if you're going to be a global company, you're going to be global. It doesn't matter whether Egypt, UAE. I don't think it's necessary for companies to move from Egypt to the UAE, but several of our companies look at opening offices and participating in the UAE market because the incentives there are fantastic. Additionally, if you want to recruit global talent, you can get global European talent and global Southeast Asian talent, Indian, Pakistani, to relocate to Dubai to be part of your management team. Very difficult to do that in Egypt. So you either have to stay kind of nearby and recruit that talent there, or jump over to the US and set up a secondary office there to recruit global talent. I think there are very few companies in the MENA region that can really grow to global scale without recruiting talent from outside the region.
You know, Ahmed, it's so interesting. If we were talking about Saudi Arabia even 3 or 4 years ago, most entrepreneurs and venture capitalists thought of it as it's a market to sell to, because there's a lot of consuming and selling going there. But as a VC hub, less so. That's is completely on its ear now. Can you tell us a little bit what's going on? What is Saudi doing now in the venture capital world of MENA and beyond?
You're right. So a few years back, Saudi Arabia was one of the best markets. It's a market where you build outside and then you target. Today, we've been seeing this changing. Some of our portfolio have been moving from other parts of the world, from whether it's UAE or otherwise. And to Noor's point, I couldn't agree more. Any product manager will tell you you need to get closer to your customers, to your users. Localization is not a matter of localizing of the interface, but really understanding the behavior and building within the context. So as part of that shift, and you know, it's an indicator that is very important to us. In 2018, we went on a journey to forecast VC deployments of companies coming out of Saudi. You know, 2018, it was something around $50 million a year that goes to Saudi companies. We're forecasting that in 2025, we will reach $500 million to Saudi companies or Saudi-based companies. You know, we're very happy to see that we've hit that trend or exceeded it in 2019, 2020. I think 2020, we've seen more than $120 million in Saudi companies in a single year. So if you believe as VC deployment as a good proxy for ecosystem health, then there's definitely a lot of entropy in the system. A lot of capital coming from whether it's government or family offices. I think this has always been the case in most ecosystems, but now we're seeing that capital being utilized in a more efficient way.
Are there sectors that really are lighting you up as you think about Saudi in particular, but also MENA and sort of beyond?
So if you look historically, where has been some of those companies being built, I'd say a lot of those companies have been in B2C. The standard industries, whether it's delivery, health, edutech, etc. Our bet this year, we'll see a lot of opportunities in fintech. This is driven by a lot of forces. One, it's a big white space, and two, regulators are really easing up some of these regulations, whether it's neobanks or EMIs and beyond that. Down the line, I think there is still a lot more room for B2B. By its nature, B2B is a global competitive business. So I'd love to see B2B companies coming out of Saudi and going global. Recently, we closed a deal with the Foodex that is doing this, but there's totally more room for that to happen. One angle is corporates need to participate in enabling B2Bs, giving them the point of the proof of concept opportunities for them to grow locally and then go global.
And small businesses don't really have access to software that much across the region, do they? I mean, it seems to me there's an incredible opportunity to really bring an entire world of the economy into the 21st century.
I'd say so. There's a lot of segments that are under-digitized. So definitely a lot of opportunities to tackle those. They're being tackled by not localized global players that are not, localization is only taking them to a very limited extent of changing the interface, but not really connecting to the systems. So the opportunity is definitely there for the SMEs.
Oh, interesting. Amjad, you've just been a leader in MENA forever, and now you've taken on this incredible role here at the Atlantic Council. In all the pattern recognition you have, and as you listen to this conversation, what jumps out most for you? What do you think people need to really be hearing from what we've just heard?
So just to put it into context, so I've been investing in the region for about 17 years. Initial stage was private equity and then moved to venture. And my biggest concern is really more the construct of the private markets in the region. I'm less concerned about the opportunity set. I think the opportunity set is clear. Chris, you've been a great sort of advocate for understanding emerging markets. I think we all know the opportunities there. The question is the construct of the industry, and is it healthy? And that's where I think we need to focus. If we really want to think about the venture capital industry in the region, we need to think about the top of the funnel, the companies that are coming in. And that is really a function that is beyond our control. That is R&D, that's companies investing, that is friends and family, that's educational institutions, and so on and so forth. That dramatically needs to get fixed, especially if we're going to think about creating innovation that is more global rather than copycat of this or that. So to me, the top of the funnel is a huge problem that is a little bit beyond our control. And we need to fix that. Now, coming to what is in our control, which is the venture capital industry, I think what we need there is, and we saw this in private equity, what we need there are firms that are constructed effectively. And what I mean by that is partners who are competent, who are continuously developing, their teams are developing. Venture is very hands-on industry, more so than private equity, I would say. So we need more talent to come in that knows what they're doing in terms of building out companies. Two is the construction of the firms themselves. Who owns the firm? Is it captive by a family office? Is it captive by a corporate? Or is it owned by the partners themselves? Three is, who are their investors? I think Ahmed mentioned, unfortunately, the region, we're stuck between family groups and sovereign wealth funds. There's no institutional base, which is really the backbone of venture capital when you look at places like the US, where it's thriving. So we need an asset management industry that grows. And then last but not least is the exit issue. At the end of the day, it comes down to returns. We have to show returns. And today's capital is so global. I mean, you're a perfect example. You'll invest in Brazil, you'll invest in China, you don't care where the opportunity is. So as capital goes more global, we need to compete. And that means returns. And without a thriving exit marketplace, we cannot compete. And today, what you see is a complete breakdown in that marketplace. Strategic M&A doesn't really happen that much. It's lacking. The public markets, very hard to access. There hasn't really been a tech IPO. There's been maybe one or two in Egypt. But we need more liquid markets, and we need secondaries, more venture capital funds so they can pick up the slack. Ahmed mentioned Series A is okay to do, although you're doing it inefficiently with 20, 30 players. Series B is very difficult. Series C is even more difficult. And the companies are not getting that fuel to really accelerate. So structurally, we have a lot to do. I'm excited about the opportunity, but this time around, I want us to focus on the structure of the industry and all try to sort of add value to it.
Amjad, pulling on that, what you said so well, I think, is what, if any, the role should be for government. Obviously, the old rule would be government should be out of the way and let's kind of move fast and that kind of stuff. But the reality is, intriguingly, in the Middle East, but elsewhere, some governments seem to actually want to engage with the entrepreneurs and hear what they want. They're creating sandboxes. They're thinking about new regulatory regimes, not making old regimes into new technologies, but to try to think on the technology itself. We're seeing this globally. What do you think is what is the right role of government to help unleash some of the dynamics that you raised with concern?
I think they could play a huge role in the viability of the industry long term. You mentioned the sandboxes, the incubators, the early stage funding. That's really their role, right? They're playing that top of the funnel role. They're creating companies and opportunities for us to scale. I mean, the reality of venture capital is we're not the first money in, right? We are, we commercialize innovation. We don't create innovation. So they're doing the right thing, which is they're trying to spur innovation, which I think is fantastic. I think that's what they need to focus on. I think the other thing where they can add value is the venture capital industry itself. How do you make it more viable? And I don't think it's just a matter of the sovereign wealth funds investing in all of these great funds that we see here. I think what they also need to do is attract foreign capital, because for us to have real liquidity in the region, we need global investors to come and participate. And we've seen great models of this, right? We've seen the government take first losses. We've seen them subsidize to some degree, the returns. There's so many models that they can play with. But I would rather see them do more of that than just purely investing in local funds.
It's interesting, Alfie. I want to talk to you because we just got, and by the way, I remind everyone, please do ask questions because we're getting now some amazing ones. And Farida El Algami was pulling on the string of family investment in VC. And I think taking her question and making it broader, there is a lot of new vehicles out there, right? There's a ton of seed funds and scout funds. Family offices all think they can do venture now. Some people are avoiding 2 and 20 funds. People are going into them overall. Government sovereigns, as Amjad just said, are participating. What do you make of all this capital to the quantity of quality deals? Are you worried about valuations getting driven up too early?
Valuations are getting driven up a little bit, but this will be a short-lived cycle if people start investing a little too aggressively, all right? Companies that get overfunded will not have VCs. I know that, Noor and I have looked at many companies that we thought were ridiculously valued very early on. They had good prospects. We would look at them at the next round. But when you get too high a valuation in the next round and you face up to the professional investors and they want the next round to be down, even though they think you're on a good curve, not because you're having problems, it's not going to look good for the entrepreneur. I would say that the money being in the market is good. It's good that the younger generation of the family offices is pushing that and pushing that within the family office structures. I think it's good. I think that in Saudi, the government, Munsha'at, and several of the other agencies have funded 10, 15 VCs. I think that that's fantastic, putting them out in the marketplace. And so we're getting a lot more new players. Hopefully, they will keep the right motivations where they don't just want to get in the deal, they want to get out of the deal, make a return. And sometimes I see some of the younger VCs being a bit over aggressive and not thinking of the back end of the company and when they're going to get out. Okay.
Our buddy Sharif El Badawi is actually pulling on a similar string, but from a different angle. because he suggests there may be a lot of money out there, but the deployment isn't necessarily up to what it could be. In fact, he suggests, is it possible we could be regressing as an ecosystem after a pretty positive wave over the last 5 to 10 years? Is money just showing up, or is it deploying in smart ways, Alfie, the future is looking pretty bright on this, or no?
I think that there's a lot of smart money being deployed. I think there's some inexperienced money being deployed, but that's everywhere. I mean, you see in the US, new hedge funds pop up and they blow up quickly. New VC funds pop up and they blow up quickly, right? So the people who know what they're doing or have done it and have a good balance of risk tend to do well and are not really affected by these waves too much. So
Interesting.
no, very optimistic. I would say the more money participating, the more people will jump in and try and start companies. The level of experience we're seeing with the founders that are coming into the market, having experience in multinationals, or even having experience in prior high growth companies like the Sue and Karim, veterans, as well as IT Works and lots of the other companies, is fantastic. There are a lot of the most successful startups are started by those veterans.
So we're going to be talking about the Kareem effect and not the PayPal effect, I think, going forward. In many ways, Noor, pulling on this string, that we really are living kind of in an era of new globalism, right? This is happening everywhere, as Alfie and you and others have said overall. The downside possibly for MENA is that means that people can deploy money anywhere, right? So what makes MENA most attractive? If a great investor is thinking about leaning into Southeast Asia or Latin America, and they have so much choice, why should they be giving a hard look at MENA in a way that they maybe haven't as much historically?
So I think there's a few reasons. I'll start at the very macro and work my way down. At a macro level, the region's massively underfunded. And we've seen this repeatedly, and this is one of the arguments or the discussions we're having here. What that translates to as investors is, lower valuations. There's no such thing as founder power. And so when you take a look at the valuations in the region on a macro level in general, and so Ahmed's point, they're lower than comparables in other markets. So when we take a look at the KPIs for a company in our portfolio and stack those up against Europe, not even the US, we are trading at lower multiples. So to the extent that you're looking for value, this region provides value as an investor. Then when you take a look at some verticals, they're very interesting. So we talked about digital health, we talked about ed tech. And again, we think of MENA and MIA in general, so most of Africa. And if you take a look at education, and if you believe in education as a sector, we have pre-COVID 150 million children that are out of school. That is 50% of the world's out of school children. So if you want to think about a part of the world where there is a huge problem to tackle and fix and a huge market opportunity, to your earlier point, Chris, on whereas the markets are huge, that is a huge market for ed tech. Governments want to solve that problem and everybody wants to solve that problem. So when you take a look at where are some big problems to solve, and then you couple that with we are 50% youth. So any investor that is looking for a youth bulge rather than an aging demographic, which is most of the US and most of the world at this point, right? This is even China, this is a diversification play on your demographic and your portfolio and your demands. And so this is a rising middle class, and you've talked about this repeatedly, Chris, it's the next billion. You're taking a look at your average age is 30 or below, 50, and then it's 40% youth unemployment. So again, when you want to take a look at talent and can we upskill those youth is one question. But the second question is that's a lot of people sitting around doing very little. So the opportunity cost of them starting companies is very low, which then breeds too many companies. Are there any good companies? I mean, we could talk about this ad nauseum, but those are kind of the macro things. So it's the demographics, it's certain pockets like ed tech, it's valuations, right? And as a region, we invest, is it 0.02% of our GDP in venture? Europe and the US are 15 to 20 times that, sitting at 0.4 and 0.6. So just simply how much gets invested in venture is so low that that's not going away. It actually reminds me, and the way we do investments reminds me of how we hear stories about Silicon Valley in the 80s, where it takes 6 months or 9 months to close an investment. You have all the time in the world to meet the founder and figure out if they're coachable and all those sorts of things. And kind of there's less capital and there are deals. So it feels like, we're at the inflection point, at the edge of something that's very interesting and an industry that's about to boom.
Well, I must tell you, I think the 6 months for a deal are long dead. I think I'm getting pressed to do things in America in 3 weeks or less, which is just crazy.
Yeah, but
wait,
the region's still at 6 months, and that's the point, right? So
Yeah,
that's how
yeah.
it was in America 20, 30 years ago.
And by the way, when you and I used to have this conversation, even 7 or 8 years ago, we spent a lot of time trying to convince our sisters and brothers in America to look at this. And I'm wondering, or do we even care anymore? I mean, is this a story about bridge building with Silicon Valley at all, or is there so much capital in the new globalism that, frankly, entrepreneurs should be focusing first at home, but also finding money elsewhere that doesn't need to be persuaded of the opportunity in a way?
So there's a question, an underlying assumption in that question, right? And it goes, I think, 2 ways. So it's a great question, but as long as we believe that our sisters and brothers in America have the ability to provide some sort of knowledge transfer because they've effectively built a lot more companies, they're fourth-time founders, right? So that is why that capital is exciting capital to the region, right? But then that begs the question, in this day and age, is that even relevant? If we're building emerging market companies, don't we want to look east towards people in Malaysia that have previously built a company and say that that capital is actually smarter than US capital? So that's the question in the dialogue that kind of precedes the conversation you're asking. Does it matter? Well, it depends on if you think that smart capital matters and what you believe to be smart capital.
But there's more smart capital, I'm hearing you say, in more places and than ever before.
Yes, in the last 10 years, as we've seen the whole world have their own unicorns and decacorns and all of that, 10 years ago, that would not have been the case because the only real unicorns or equivalents were in the US. Now the whole world has their own set. And so all of that becomes smart capital or strategic capital, and it has the ability to knowledge transfer into the region and teach our founders.
Ahmed, I think...
Chris, if I may add to that.
Yeah, of course, please.
I think it's important to highlight that a lot of the funding you see globally still comes from U.S. institutional investors. So I think before we throw them under the bus, the reality is that.
Are we? Sorry, I didn't mean to do that.
aside from China, I think that has its own internal funding that's super robust. And even in China, a lot of it comes from U.S. investors. U.S. institutional investors are a huge liquidity pool in the world. Let's be honest about that. Pension funds, endowments, these are big capital players. And that's the focus. Whether they're American or green, it doesn't matter. It's the pools of capital that we should be focused on. I think China is very interesting, and I think we've seen them come into the region. And I would argue probably in a more constructive way than U.S. firms so far, because U.S. firms haven't really been there that much.
Constructive in what way, Amjad? What do you mean by constructive?
I think they're putting boots on the ground, which I think is positive. I think they're leading. Obviously, the government is leading, but then they're following. I think you see their big corporates much more engaged. So they've launched companies in Saudi Arabia, for example. So I think they're coming in a little bit more, let's say, powerful way than we see from U.S. players so far. So I think they understand the emerging market opportunity. And so that's another interesting pool. So I think when we say global investors, not necessarily U.S., but where are those big pockets of capital that we should be chasing?
I want to ask you this because China is looming large in rising markets in a way that the West is not writ large. And it does appear that they really seem to be not just sort of sniffing around, but actually showing up in the region. Is that true? How do you think about China's role in Saudi and then beyond in the MENA tech ecosystem?
So, and that's part of the goal, right? It's to get that smart capital, and it would be very difficult to make a general statement on what constitutes smart capital. But definitely we're seeing engagements, whether it's from the US, Europe has been closer, and a lot of the deals that we've seen, I don't want to name any names, but not to jinx it, but definitely Europe is one great pocket, and China have always shown interest, and I think the interest has been mutual there. So in general, we see a lot of interest in China and e-commerce. There's a lot of big names that have experimented, and whether experimented and some of it was sustainable, some of it was not so much. In e-commerce and logistics, I'd say those are the two sectors where we've seen Chinese capital mostly focused.
And what do you think we're going to be saying in 2 to 3 years, Ahmed?
So I think there is a part for our local corporates to improve their competitiveness. So that would open up big doors for B2B SaaS on multiple internal verticals, whether it's anything from procurement to cybersecurity to HR, human capital, etc. That represents a very big white space, and the ideal scenario is that we will find local players teaming up with global smart capital and being able to roll it out to the right customers in the region. So fingers crossed, but that's where our bet would be.
So, and what about, this is something Amjad pulled on, which is absolutely positively true. And we're seeing now significant, it's not just up rounds in other parts of the world, but actual exits, people making lots of money. Is China going to be part of the solution of exits? Or, Ahmed, how do you think about what exits are going to look like in the next 2 to 3 years, which tends to be a flywheel of getting more money brought in?
So I'm not aware of any Chinese exits on top of my head. But what I do know is that there's tremendous efforts from local governments, whether in Saudi and UAE and others, to create those tech IPOs. I think Fawri was one of those great ones in Egypt. There's a lot of government, a lot of voices that want to replicate this. Saudi especially. We know that something will happen within the next 2 years where we'll start seeing technology exits. Whenever you speak to some of those companies or even the investment bankers who are grooming them to that journey, their concern is how will this be valued? It's just taking the chance of being the first tech company to go on a public Saudi market or a UAE market. What kind of multiples do we expect? Do we have the right investors? And one strategy to do that is to go and bring smart capital to anchor the valuation from global markets, whether it's US or others, and give local investors the comfort on this valuation and the trajectory of the company. So definitely one more exit channel will be IPOs.
So Alfie, pull on that string. First of all, give folks, if you don't mind, 2 sentences on what Fawri is and what happened to it. And is this the first sign of a cavalcade of something else that may come, with Kareem and Souk in different ways? How do you think about the exit future? And maybe just give 2 words on Fawri if you could.
Fawri is a company that actually, I think the first investor was, 15 years ago, my Hani, and went from a very, very small growth and then a large investment from a US fund and then went public. A couple of years ago, they did a deal at 100 million valuation. Everybody thought it was high. It's now listed on the Egyptian Stock Exchange, with a $2 billion valuation, right? So to go to a $2 billion plus market cap on the Egyptian Stock Exchange is just a major transformation on so many levels. Nobody would have thought that that was possible for a tech company. So local exchanges are now a viable exit for all of us looking at them, whereas nobody would have considered it before, would have considered the NASDAQ or the AIM or somewhere else. I would like to maybe just tag on to one of the earlier points. I think that the Chinese will be coming. They're exploring. There are a lot of Chinese VCs looking and making a few investments, and we've seen a few of them, and they've co-invested with us. I think the Chinese corporates will be coming. They haven't gotten to us yet, but they're going to be coming, and they're going to be making major investments because it's one of the few countries, unlike the West and in the US, their investments will not be pushed back, or there won't be as much resistance in this region. They'll be looked at agnostic.
Noor, we're getting a lot of questions about the appetite of big funders in the Middle East to want to fund elsewhere. Mazen Omer has sort of raised this, and Sharif al-Badawi is particularly pushing on kind of the how hard it is sometimes. I mean, you guys are investing in people, but people invest in you. And it sometimes has been historically quite difficult to get real local money in LPs to fund here versus them trying to get to America, then try to go elsewhere. What's going on in the LP world? The people who put the funds into business and their alternatives looking abroad, what's going on here? What's going to keep this money more focused in the MENA firms like yours?
So I think that the region is still very early in its learning curve on venture, and And I think that the confidence that comes in investing in VCs that have maybe been doing this for 10, 15, 20 years is a different level of confidence. In addition to the depth of the capital markets, both private and public, and the amount of M&A and transactions that happen abroad and provide liquidity and real returns, not just paper returns, will always drive investors to give it to the more confident, unless there's a better risk return profile in the region. So I think that in order to keep the region interested, you have to tackle both of those points. The first is the confidence. And the confidence comes either with experience or by piggybacking on other people's confidence, right? And so if there are US investors that are looking at the region and starting to invest in the region or regional funds, then the regional investors start getting a little bit curious. And rightly so. If these people who've been doing this for 20 years, all of a sudden find something in my backyard that's interesting, I don't want to miss out on that, right? So that's the confidence element. And then the liquidity element needs to come with time. So even in the US, again, 30 years ago, did this exist? How much would it happen? Even in Europe, so Europe about 10 years ago or 12 years ago, hit the same number that we hit last year. Last year, the entire MENA region, all deals, all year was $1 billion, right? 496 investments. So when you think about that number, $1 billion is like one large Series D round, or maybe Series C round, even if you were to go over the States. But it's our entire region. But in Europe, about 10 or 12 years ago, those numbers were not very different. And the question is, in 10 years, they went from there to here. What is it they learned? How did they implement this? And how can we also get behind it and do the same thing? And that's the question is, are we at that same inflection point? Can we have that same trajectory? But most importantly, when you take a look at first-time funds across the world, 70% of funding comes from endowments and pensions. Those are governments. Right. So until our governments start deploying, which they've started to recently, and continue to deploy in incremental amounts, and enable the growth of this ecosystem, it's hard to really get that trajectory and get that curve that, for example, we saw in Europe, where it really was government money. 70% of those funds were backed by European governments. So that's kind of the long and short of it. And I think the governments coming in the region just inspires the family offices to do the same thing. So once governments start investing, families start investing.
Alfie, and I'm going to ask Ahmed too, if I could, because we got a couple of questions. And Fasi Sandhu asked, I think, a very powerful question. I mean, obviously, Elon just put Bitcoin yet again into the stratosphere overall. But I think as interestingly, as importantly, every country seems to be looking at doing their own coin. And a lot of focus is going to be putting on this, I think, globally, that may shift monetary as well as fiscal policy in ways that we're only in the fantasy stage to understand what it means. But vis-a-vis venture, and again, Alfie, I'll start with you, and Ahmed, if you want to chime in. Is there an opportunity in digital exchange? Is there an opportunity to help be able to have more people invest by having the flexibility and the transparency and the openness and low cost that can be offered by coins? How do you think about, what will we be saying about that in 3 years?
I mean, you mentioned a lot of things that that are hurdles in our region: transparency and ease of, transaction and. So I'm not really sure, Chris. I think the purpose of coins for people is non-transparency, secrecy, or ease of transactions. And the third group speculates is just speculating. But the users are balancing those two things. So as the governments come in, they're going to try and kind of keep a hold of that, especially our governments in this region. I don't think you're going to see a lot of cooperation and a lot of openness towards that from the government region. I'd like to control and track, and because of the security threats, keep track of where large pools of money are going.
Ahmed, what do you think? Is there a democratization of VC coming, or is it going to be a while?
Although I've learned from enough blockchain conversations that there's not always a winner, and maybe I won't make the best friends. So I'll give you the safe answer, which is, I mean, at STV, we invest in companies, not experiments. And where if the use case for blockchain presents itself in the right context, then we will be ready for it. It's a great technology, and then the use cases have been limited, but there are enough people who have the full right to be optimistic, and will be ready for it.
Amjad, a few people have asked questions picking up on one of the three main points you made about exits overall. And so Ned Jarudi, who's obviously been very engaged in the ecosystem with all of you in the last decades overall, he's asking a bit about the role of corporates in all of this, and how can they be better partners, and global corporates, not just MENA corporates, but both, to be able to help these companies not only succeed, but may also play a role in exits.
Yeah, no, it's a great question. And I think corporates can play a big role, and we sort of don't talk enough about this. The reality of the region is we have very large corporates, as you know, family-owned businesses. They own pretty much 90% of all sectors. So I think they can play several roles. I think one is we need to incentivize them to work with startups rather than see them as competitors. So I think they can be great customers. I think they can be great collaborators. I think they can be great partners. And we're starting to see a bit of that, but I don't think to the degree that you'd like. I think we need to see more of that. I think the other thing that we need in the region to spur more involvement of the corporate sector, specifically on the exit side, is a debt market that is functioning. I think a lot of us don't, again, talk about this issue, but the credit markets are not very robust. So we need the credit markets. We need banks to be more active in M&A. We need these debt capital markets to start funding M&A transactions for all companies. I mean, mid-market companies in the region have a lot of difficulty finding capital, which is why private equity played a nice role for a while, although it's an expensive way to fund. So we need a debt market that sort of drives the M&A market a bit, so these corporates can get more involved. But I do think it's a great area to sort of put some attention to. And we need to incentivize these corporates to work with SMEs.
So interesting. Noor Fassi Sandhu has a wonderful question, and you've lived this, so and you know it over the years. We think about MENA as a thing, and in a way, it is 350, 400 million people, but there are not a lot of free trade agreements, right? I mean, it's still the act of moving things or doing things country to country is not easy. And I'm sort of wondering, how do you think about the opportunities for, that kind of opening up so that there can be greater movement of, ideas and goods and services going forward? And I'll add to that. Well, yeah, answer that first. I mean, I have a follow on for you.
So we think about it differently as a fund than I do personally. So on a personal level, I think it's quite ironic how we're the opposite of Europe, where you have no borders but like 20 languages, and here we have like 20 borders but the same language. So when you think about it, then what does that mean? How can we leverage that asset that we have, which has a common language across 400 million people, to build companies and be borderless? And so what we found then as a fund and as a firm is, if you want to be borderless, you need to be up in the cloud. And so as a result, we've decided that our firm from day one would be enterprise focused. So 70% of our investments are in B2B business models and technologies that sell to corporates. Not only are they easier to transfer borders because you can fly somewhere, well, not anymore, but in general, you can fly somewhere, do your sales and then move on, or do it over the phone or over Zoom. And so it doesn't really matter where you're located, to our earlier point. The second part of that is that B2B or enterprise companies are more capital efficient in general at large and don't need to spend tens of millions in marketing on Google or Facebook or any of that sort of thing. And so as a result, given the dearth of venture in the region, it's helpful. So for those two reasons, we focus on enterprise, and we like to think about the region as one market. The question is, how is it one market? In what context can you make it one market? How can you leverage the language asset that we have?
Obviously, there's a next door neighbor there that has been known as a very one of the great tech hubs of the world overall. And all of a sudden, we have the Abrahamic Accords. I have had more people who I have never known call me in the last 4 or 5 months from Israel asking me how they can get to Dubai than I've ever heard in my life. What are we going to be talking about in 3 years? Is there going to be more cross-fertilization there? Or is it going to take a while and maybe some continued, at best, parallel play?
So I'm guessing that's targeted towards me, unless you said someone's name and I didn't hear you. Okay.
You.
So I do think that there's going to be some form of collaboration. I don't know what that looks like. There's already been cross investment between governments. So that makes for very interesting times. I think that every country in the world has something we can learn from, and they've been always net exporters of technology. They've managed to make the US their core market. It's the first stop for companies based there. That would be something great to learn. Right. So to the extent that, we do believe we have innovative founders that are solving real problems that are competitive with US based founders, which we firmly do, then how do you cross that ocean? That is something that we could probably learn as they've done that for so long and so well.
Alfie, our friend Mona Moafi has been really pointing out quite right, because we hear this from LPs, we hear it from our entrepreneurs, we think it ourselves, I think in our own right. And this conversation has been obviously about capital and returns, but at the same time, there's tremendous desire to focus on ESG in the way that we do business and also in some of the companies that we do. And there's always this sort of idea of you invest for capital returns, but you're also investing in companies that are rapidly changing their societies. And Egypt has many examples of this. How do you as an investor, how do you as a leader in the ecosystem think about ESG, and what are the frameworks that you think can help encourage focus on that, while at the same time having focus on obviously building great enterprises and help building other great enterprises?
Well, maybe I'd split that into two parts, the ESG part and the social part. The ESG, I look at ESG as just kind of a set of guidelines for good behavior for companies, and just doing a different kind of audit as well as code of conduct. We have a full-time, in our firm, we have a full-time ESG officer who does a regular review of every company we're about to invest in, and portfolio companies after they become portfolio companies, for compliance with global ESG guidelines. On the other side, on the social side, we have to have the encouragement and promotion and funding and training of social entrepreneurs, which may not be the best fit for our funds and for the return for the LPs. However, they're very necessary for the growth of the ecosystem and for the growth of the societies on top of which we build these companies, or as part of which we build these companies. So those programs are developmental programs. They're kind of outside the framework of VC, but they're run maybe as in parallel. For example, we run them in parallel to Flat Six Labs, to the accelerator. We run a developmental program in Egypt, Start Egypt. We'll be doing it in several other countries as well, in Tunisia, Morocco, Jordan. We're looking to do that in many locations. But separating that from ESG, I think all VCs should or do comply with ESG guidelines and hold their companies to those same kind of code of conduct. Chris, I just want to go back to one point that was mentioned earlier about the governments. I think the biggest thing that I would say I need from the local governments, or we do, is a reformation of the regs to allow things like safes, stock options. It's easy to set up a company, but then you have a structure that doesn't really work for VC. And then the other thing on the other side is consistent adjudication and dispute resolution. And that is the thing that gives investors the highest degree of confidence to participate.
So, Alfie, it's interesting that because Hani Finakli earlier asked, what about even when things go wrong? I mean, how are we getting better about companies going back? I mean, most startups don't work. Is it easier to fail now in the Middle East, or no?
Psychologically, it's easier to fail. I mean, technically, corporate side, most of the companies that have gotten Series A investments have already moved offshore, right? They're already organized in the US and Delaware, and in the Caymans and the Netherlands, wherever. But for them to stay here, and I would love to be able to invest and meet all the restrictions I need to meet in an Egyptian company, in an Egyptian corporate setup, right?
Yeah.
Not have to go and set up a Dutch company. So those are the things. And really, I think the dispute resolution is what gives everybody the confidence to participate. I will bring lots more players because, as we both know, a lot of the family offices traditionally need to own 51% of a company or a major stake so that they actually can exercise their rights, because they can't get restitution in court comfortably or easily and in a decent time frame.
Yeah. We're running out of time, and it's just been unbelievable listening to you folks, and I learned a ton from you everywhere. But I have a couple of questions and ask you each for a 30-second wrap up of this. And one to Ahmed, and then Amjad, I'll give the last word to, of course. Ahmed, we're getting a lot of questions, and Ken Ford asked a great one about the role of women in the ecosystem. I think a lot of Westerners are surprised that while there's a lot of work obviously to be done, that frankly, there are more women, I think, doing startups in the Middle East than there are often in Silicon Valley. I must say that I think one of the greatest stars in your company right now in STV is a woman. Can you shine a little bit light on what you're seeing about women entrepreneurs, even in Saudi, but also in the region?
We definitely, we believe in this fully at STV. And in fact, one of the things we do is we keep count of women makers, product managers, and our startups, software engineers, etc. And we publish this every now and then. I think where we are today is so much better than where we were a couple of years ago. Soon we'll have some portfolio companies to point at, nothing to talk about now. But 100%, I think this deserves more focus, and it's about founders as well as product managers and engineers.
Amjad, using that as an extension, to give you the last word, though I will ask everyone a 15-second question in the end. You and I have talked a lot about the importance of talent. So interesting, because in a panel like this, I wouldn't be able to get 10 minutes into it without people, complaining that there's just not enough talent, particularly tech talent in the Middle East, and this is compounded by, data scientists and this kind of thing. What can you shed from what you're learning and seeing about actually a rise of talent within the region and companies being able to access talent elsewhere as well?
Yeah, look, I think it's been refreshing in a lot of ways. I think we still have more to go, but I think what's nice about venture capital, and you mentioned women, I'd love to pull on that, is the fact that startups are so indifferent about this issue. I mean, they want talent, and I think that's why you see so much female talent actually in startups, because they don't care. They want the best person. So I think the sector is doing quite well, I would say. And remember, what's important about the sector as well is that in almost all of these companies, I would say all startups, you have stock option plans. So wealth is also being created for women, and as these companies exit and grow. So it's kind of exciting to see the role of women in startups, and I think we need more of that. The other thing that's happening, and again we mentioned earlier, is we're tapping global talent. One of the companies I'm involved in, we have talent in Russia. Another one, we have talent sitting in Pakistan. Another one, we have talent sitting in the US. So talent now is global. And I think we have the ability to access it as long as our companies are exciting and they're doing the right things and they're aligned. I think the one part that we need to work more on is the educational system. And we need a more robust talent pipeline for the next 10, 20, 30 years. I think that has to start with K through 12. And you still see that lacking. Critical thinking is lacking. The right programs in terms of the jobs of the future is lacking. And that is not a Middle East issue. I think it's a global issue. Yeah. But we have an opportunity to leapfrog. And I think we should put a lot of focus in creating that talent pipeline at a very young age.
Folks, you are amazing. I mean, the insight you shared today was amazing, but I know you and your work now for over a decade, and you're helping young people help themselves to really change not only the Middle East, but I think the globe overall. We got a lot of policy folks on this call from the region, from globally, and certainly from Washington, D.C. And if you each had one sentence, one real major takeaway you hope folks are hearing from what you're seeing in the Middle East, let's wrap that way. Nora, why don't you start us up? What's the one central message you hope from a great discussion like this folks are going to take away from it?
And the region is not just an interesting opportunity to invest and create returns, but really it does have that angle of, as you do venture well and other investing very intentionally, you have the ability to really impact hundreds of millions of people.
Ahmed?
I would echo that. I would say the doors are open to make an impact and capture value more than they have ever been before, and would love to see that happen.
Alfie?
This is the opportunity to create wealth faster locally for all local officials, faster than all of the other stuff you're working on, Focus on this. You'll create a lot of wealth. They will reinvest. They will carry the social burden for you that you as government officials are struggling to carry.
I cannot thank everyone for all the questions they asked and just the engagement of this, but Amjad, I leave it to you to give the final word that people should take away from this. And thanks to you for all the amazing work that you and the Atlantic Council is doing.
Well, thank you, Chris, and thank you to everyone on the call. I think really the reason I wanted this panel is because all of you bring such great insight into what's happening in the region. And what I love about this discussion is that we're talking about the challenges very early in the industry. And we've learned a lot over the last few years. And I think all of you are trying to add value rather than just looking at things from a pricing perspective. So thank you all for joining us. Really appreciate your time. Thanks to the audience. And please check us out on our website, on our social media, if you'd like to see this recording. Thank you very much.
Bye, everyone.